Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, August 28th. In today's episode, I'll go over NVIDIA's earnings and what it means for the rest of the year. I'll also preview Apple's iPhone event and discuss the disagreement amongst Apple executives on their AI strategy. The stock market was back in the green thanks to a late afternoon rally. Both the S&P and Nasdaq were up 0.3% for the day. And a huge shout out to the Russell 2000. That's the index that tracks 2,000 of the small cap stocks. It was up 0.8% yesterday. You know, the Russell 2000 doesn't get much love, but it's up over 6% in August, while the S&P and Nasdaq are up only 2% for the month. So for everyone that's saying that the stock market is just being carried by mega cap big tech companies, well, it turns out that the small cap stocks are quietly having a moment right now as well. Now, speaking of mega caps, NVIDIA just dropped earnings, and the numbers were massive. Revenue came in at $46.7 billion, topping estimates and jumping 56% from last year. Earnings per share hit $1.05, also beating expectations, and data center sales hit $41.1 billion. Still a record, though just shy of what Wall Street was looking for. But to sweeten the pot, NVIDIA announced a $60 billion share buyback program. On paper, it's another blockbuster quarter. But here's the twist. Despite the beat, NVIDIA stock actually dipped 2 to 3% in after-hours trading. Investors are nervous because growth is starting to cool off a little, especially in the data center segment, and management gave cautious guidance around AI demand and exposure to China. Basically, the market wanted fireworks and got more of a slow burn. NVIDIA is still the backbone of the entire market, and no one else is even close. But when you're worth over $4 trillion, good isn't always good enough. The big question now is whether this quarter marks the start of a slower growth or just a pause before the next big wave of AI spending. I'll be keeping a close eye because wherever NVIDIA goes, the market tends to follow. Let's run through some headlines, starting with Apple. September is right around the corner, which means it's iPhone season, and Apple just sent out invites for the iPhone 17 event. This event is happening on Tuesday, September 9th. Now here's what we're expecting for that event. Apple will roll out the usual lineup, a base iPhone 17 that'll look pretty identical to the iPhone 16. Apple will also have an iPhone 17 Pro and the Pro Max, with redesigned backs and bigger camera bumps. The exciting news here is that Apple is expected to launch a new variant of the iPhone called the iPhone Air. The rumors say it's going to be the thinnest iPhone ever and their first actual redesign in years. But the phone will have less battery life and only one camera in the back. Personally, I don't care too much about how thin my phone is anymore. I'd rather just have it be a bit thicker and have a better battery life. Now the other thing to watch out for in this year's event is for a potential surprise announcement of an AI deal. Apple has gotten a ton of hate for lacking an AI strategy compared to big tech rivals like Google. Some executives at Apple, like Eddie Q, have been pushing for Tim Cook to buy a major AI startup like Perplexity or Mistral. But Tim Cook is famously cautious about doing big acquisitions and prefers to do a licensing deal. And there have been rumors of Apple kicking the tires on an AI deal with Google. So we'll see if anything is announced at this Apple event. I think if Apple does announce a major AI move, whether it's an acquisition or a licensing deal, don't be surprised if the stock rips higher. I do wonder though, do you guys think if Apple is going to become the most valuable company in the world again? Because right now, NVIDIA is the most valuable company worth $4.4 trillion, while Apple is at $3.4 trillion. Let's shift gears and talk about Kohl's. The struggling retailer just pulled off a much-needed win in their latest earnings. The company beat earnings expectations on revenue and profits for Q2, and the stock is booming this morning. Now, to be fair, revenues are still falling. Comparable sales dropped 4.2% year over year, but that's not as bad as what Wall Street was expecting. And to add to the good news, the company expects sales to decline by just 5 to 6% the rest of the year, which is better than the 7% they previously expected. The company expects the bleeding to slow down. Kohl's is trying to turn around the company, and it seems like some of their turnaround efforts are starting to pay off. Kohl's has been cutting costs and slimming down inventory. They're also trying to win back customers with more promotions and cold cash, and also having a bigger Sephora shops in the stores and new categories like fine jewelry and makeup. And what's wild is all this is happening at Kohl's despite the company's C-suite being a total mess. The company has churned through 3 CEOs in the last 3 years, and the last CEO got fired after giving a sweetheart deal to a vendor, which was owned by his girlfriend. So yeah, Kohl's is dealing with it all: corporate scandals in the C-suite and declining sales. Right now, the company is being led by an interim CEO, Michael Bender, who's been a member of the Kohl's board since 2019, and they're still looking for a permanent person to take over the role. For now, investors are happy to see some progress in the turnaround. Kohl's stock is up more than 20% this morning in reaction to the earnings. It's a nice bounce back after the company's stock lost 30% of its value in the past year before today's jump. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Cracker Barrel shares are jumping this morning after the restaurant chain announced that it's bringing back their old logo. Cracker Barrel had announced a rebrand of their logo and their restaurants, and that just set off a social media firestorm. People said that they were ditching their country roots. It got very political, just like everything these days. I mean, don't get me wrong, the redesign was pretty bad, but the backlash was way worse. So Cracker Barrel is fully reversing course. The company released a statement yesterday saying that they're going to keep their old country brand intact by keeping the classic logo and the rocking chairs and the gift shop experience, the fireplaces, and even the fun games on the table. Because of that, Cracker Barrel stock is up more than 4% this morning. On the flip side, PayPal stock is getting beat down this morning after multiple German banks began blocking payments on the platform due to a malfunction of its fraud detection system. German Reddit users confirmed that their payments were being denied, and PayPal says it's working on a fix, but they don't have a timeline just yet. PayPal stock is down more than 2% this morning on the news. Man, PayPal stock has been such a disappointment this year. It's down like 18% so far. PayPal even has a stablecoin, but they're not able to capture the hype like other stablecoin companies are. That's all for today's show. Keep navigating those waters and see you tomorrow.